Yeah, they don't want to get ripped off, man. They don't want to get ripped off. No music? How about that? Oh, I don't even want to play anymore. Oh, man, I don't want to play. That's what I get, man. I should have been playing. How we doing today, everybody? Welcome to the Closing Beat. Happy Thursday. Hope you're having a good day out there. Everything seems good. We are up and running here. Hey, tonight, Wine and Wealth, by the way, we're going to go over new laws. Brand spanking new laws. Actually, I wasn't planning on doing this, but we were talking to retirees and people retirement planning. There are some brand new laws that are going to be very, very helpful to you. So we're going to cover that tonight. I'm actually going to go through Nest Egg, show you how we can model that when Nest Egg will update. But some big perks for the retirees out there coming your way, retirement savers and all that stuff. And that's not a tease. I mean, there's some good stuff. So we'll cover that a little bit later. Grab a glass of wine, come hang out with us if you're one of our clients. I use that every Thursday just to teach clients something new. And in this case, brand spanking new, right? Last minute, hot off the presses kind of a thing there. Anyways, we'll be doing that later tonight. On the right-hand side of your screen, slight up day. Actually, not bad. I'd say that's pretty good up day. Normally, when the market's not volatile, that's actually a pretty good up day. You know that right now, during a Labor Day week, the rest of the week is just kind of whatever, right? Depending on where you're coming at from that time year to date. Could be a down day, could be an up day, but nothing really miraculous. And so we're basically moving along that path. Remember, Tuesday was a big down day. Wednesday, we had a little up day there. And today, we're actually a little higher, so we're breaking the trend ever so slightly. But this is the performance during Labor Day week. Blue, when the market is up year to date going into Labor Day week. Red is when the market is down year to date going into the week. And black would just be, hey, forget it. I don't care. Sideways, up, down, doesn't matter. Show me all the years there. So that's what we have going on there. So, what do you think? Buy the dip? Right? Are we in the buy the dip mode? Well, I'm going to share some fun data here with you in just a little bit about that with the S&P, because I've been talking over the last couple of days about this sort of slowing cycle, right? And so I want to cover that a little bit more. I'll be working with you on that good geeky details there. Hang tight. As far as the markets go, Jerome Powell was the big mover of the markets here today. We didn't really move the markets. It was okay. He basically said, in response to a question that was asked to him, that we are going to continue with raising rates until the job is done. That was the exact phrasing that he used there, and so that was what everybody focused on. The job being lowering inflation. So you guys are, no stranger to that. Now we won't hear from him until the rate hike. Yeah, actually, we won't hear from Jerome Powell until the rate hike there. That'll be in about 2 weeks there. There's now an 87% chance that he is going to raise rates, or the Fed will decide to raise rates by 0.75 of a point. And so, we'll see what happens there. I think that's probably accurate. I think he has the green light to do what he wants to do. All is good there, so no problems. Let's look at the market here. S&P, there you go, on the screen. Well, we got a little bit of a bounce here. We're going to talk about that in a second. Buying the dips in the market, should you or should you not? If we look over at the NASDAQ real quick, we've been averaging about a 1% loss for the last week or so. That's changing hands a little bit. We shaved a little bit off. We're now at about a 0.8% loss per day on average. If we look at the Dow, same thing, just kind of a uniform day across the board with everything gaining just a little bit. What's the face? It's better now. I closed the Dropbox. No? Okay. I love it. And the Russell, I'm going to point over here on the Russell there. Also, one quick thing, if I could point out, today's action in the stock market brought to you by healthcare, really, right? Healthcare. Third place here. You've got oil, utilities, and healthcare showing the biggest strength. Now, it's pulled back a little bit more, so it's not coming from the best position of strength. But if you're looking around, it's going to come in the, what do they call it? Diagnostics, healthcare research kind of area there. You're going to think of names like Thermo Fisher. I apologize if I butchered whatever they call this industry here. Thermo Fisher, Danaher, some of the big names there. IQVIA, There you go. This is where all of the support for the healthcare sector came today. And that's not to take anything away from like United Healthcare, which is one of the stronger ones overall. Cardinal Healthcare shaking off the hiring a board to manage the board thing that we talked about the other day. So not bad there. And Abbott Labs coming off of lows. This is one of the weaker ones. So I like to point out stocks on both sides there just so you kind of have something to look at. Inside the S&P, your best performing sector today was financials. We were just talking about that yesterday, right? Money not quite coming over to financials, not giving them the benefit of the doubt. Well, today with rates apparently moving higher, that was a good thing for them. I will point out that rates did, in fact, move a little bit higher today. Here's the long-term bond. We can look at short-term too if you want, but it's the same thing. As the price of bonds or notes go, the opposite is true for yields. So the further these fall, the higher interest rates go. And that's exactly what's going on there. You wouldn't expect any different with Jerome Powell saying what he did today. Since the late 1990s, there has been a strong inverse correlation to stocks and bonds, meaning when stocks go up, bond prices go down, right? What we have going on this year, stocks go down, bond prices go down. So stocks are going down, yields are going up, if you want to say it that way. That's just not normal. I can't stress that enough. I've shared some charts with you to show how that is. It's been pretty correlated since the 90s there. A little bit of inversely correlated. So pretty much inversely correlated since the 1990s. If you've ever heard of long-term capital management, there was a brief inversion there, or a brief correlation there between stocks and bonds during that time period. That was a mess. There's a really good book. I've got it here. Where is will you grab me all those books over there when you get a chance? It's got to be one of those books there. There's a really good book about long-term capital management. Very fascinating. It's the theory behind, or it's the, if you don't know what they did, the analogy is they were picking up pennies in front of a steamroller, and eventually the steamroller got the best of them there. But anyway, so other than that, bonds and the stock market typically are inversely correlated. That is not the case. Thank you, sir. Oh, here it is. That's the first book on there. When Genius Failed. So if you want to read a cool book and you're into the stock market, that's a really good book. It is super dusty because it's been forever. That's the one. Yep, The Rise and Fall of Long-Term Capital Management. So if you're curious what that is, I don't know that guy. I'm not getting promoted to sell books or anything, but it just stuck out to me. And I was making the point that typically we have an inverse correlation. Not the case right now, man. And that is true for most of this year. In fact, now you're going to go up to 134 days where the bond market is more than 50% correlated to the stock market. That is not normal. Not normal there. What else do we got? Black Knight. So Black Knight is where you can get a lot of your mortgage and housing related data from. They are the kings of how they calculate all that. They share a lot of it with you. Some of it you have to pay for. But these guys are the ones that everybody gets their data from. If you ever hear me reference something like that, that just so you know, that's where I get it from. Median home price fell month over month for the first time since November of 2019. That's good news. Some of you guys are out there, you want to buy a house, right? Prices may be coming down a little bit for you. Mortgage delinquency rates have risen 2 months in a row, but don't get excited about this. Foreclosures, I'm going to go buy one. We're like at all-time lows. We're just barely ticking up off lows there. And the number of foreclosure starts are down to the lowest levels of the year after just a little bit of a bump higher. I didn't bother putting the visuals together for you. You can just go look it up yourself if you're interested. But it's kind of good news, right? So from the housing market perspective, it's kind of good news there, depending on where you stand in that. All right, let me share some stuff with you here. I will do the full details of all the data and everything in our notes from Jazz email this weekend. But if we look at the stock market here, what was that? We go over here to the stock market. I'll use the S&P. The markets this year have had 42 down days of 1% or more. We lost 1%, 1.5%, whatever it is. This right here where I'm hovering is a great example. We are on track, if that were to continue, to have as many down 1% days or greater as compared to 2008, just to give you an idea how volatile things are. Now, do you buy the dips? Right? That was the curious part here. When we have these big down days, it stuck in my head that most of the time people use that as a place to put some money to work. Do you? Right? Is that what you do there? Over the last 3 years, the average bounce in the stock market after having a 1% down day or greater was 0.5%, right? In other words, people attempted to buy the dip. We didn't fully recover, of course. To have a 1% down day and then the next day be up 1%, that's pretty rare. But about a 0.5% recovery. And all I'm trying to say there is when people see weakness, they put a few dollars to work. They don't go all in, you know what I mean? They put a few dollars to work there. Since 1953, which the reason we use 1953 a lot in our data is because that's when the New York Stock Exchange moved to a 5-day trading week. So there you go. If you want to know something like really old and this guy, he's been around. We moved to a 5-day trading week. So 1953 is when we use because we want to get Monday, Tuesday, Wednesday, Thursday, Friday in a lot of the data there. The market's average gain after a 1% day's drop since 1953 was the 0.5% that I just mentioned a minute ago. This year, we have a slowing of the markets. Remember, I had just shared this with you the other day, yesterday. If you want to look at this, we're talking about comparing the market to itself and seeing a slowing of the average performance cycle there. Well, actually, this year, if you look at any 1% down day, the average return the next day, negative 0.5%. It's actually negative 0.45%, but let's say negative 0.5% to make it simple, right? Now, it's a day-to-day analogy that I'm doing, right? Oh, it's one down day, Dustin. We're investors here. We're long-term. We're doing our thing here. It's a day-to-day analogy, but it shows the tide shifting. A lot of times I share stats with you, and it's more of like a put your finger in the air and which way is the wind blowing, right? Which way is the tide coming in? I don't want to fight it, right? And there may be little blips along the way, but which way is the tide rolling? That's what you can see to add to what I just talked about. Was it yesterday? Yeah, yesterday. So this year, if you take out COVID, it's the third worst performance on record. In other words, when we have a down 1% day, the next day is down another 0.5%. That average performance for the year, this year anyways, take out COVID, that's the third worst that we've seen since 1953. In other words, people are not buying the dip, right? So you want that average to start changing. If you're tracking something like that, so okay, well, I see now that we have a 1% down day and the next day is flat, or the average moves to flat. Okay, now we've got money in there, but we don't have the masses in there. So you might be getting in a little bit early, right? Maybe picking up on something there. So going a little off topic there, but that was something I wanted to talk about just to be a little bit different, huh? We look at things just a little bit differently here. And let's move on. Stocks in the news. What on earth is all this noise? Stocks in the news we've got today, Walmart. There you go. Walmart Plus members, congratulations. If you're a Walmart Plus member, lucky you, no added cost, you're going to get Paramount Plus for free. Paramount Plus. Cody, can you name one show on Paramount Plus? Real? Oh, okay. I might be out here. So, Yellowstone. He's excitingly saying Yellowstone. So I assumed Paramount Plus was like Hallmark. I just thought it was not a big deal. Okay. I have not seen that show. I do know of it, but I have not seen it. Well, congratulations, Walmart Plus people out there. That is awesome. Amazon. I don't know what to do. So Amazon, we now understand that they have football games, Thursday night footballs on Amazon. I don't know. Except for tonight, even though the Amazon box over there clearly says Thursday night football. That's not the news today. Amazon is the latest to slow down their hiring rates there, right? So that would be one of the other stocks in the news today. Oh, Dave & Buster's. Cool place if you ever get to go there. They didn't do so well. They're working on a transition. We talked about this during their last earnings report there. Working on a transition. Same store sales up 9.6%. Sales were better than they expected, not better than Wall Street expected. So they're happy with their turning of the corner going towards that digital approach there. But Wall Street says, what? That's not going to quite cut it there. What else do we have? McCormick. There we go. McCormick hits new 52-week lows here today. All of it was bad for them. And the word inflation or inflationary was used over a dozen times in their earnings report there. These guys make your spices and whatnot, so they are no stranger to the issues there. And it could be the weather today. I'm sorry because I do see it blipping a little bit. It could be the weather. For the first time in forever, it's rained all day. Literally just rained all day. And if you don't know Florida, usually Florida rains for 20 minutes and just rains like crazy, wind and all kinds of chaos, and then it goes away and it's all fine. Today, it's like Seattle in the place. All right, it's really, really bad there. I typed Texas Instruments. I'm going to go back here and type in Taiwan Semiconductors. Revenues just for August, up 60%. This is already predicted, so you're not going to find that the stock blasted off or anything. But revenues up 60% as expected. This is putting them on pace to report next quarter just above where they had expected. So you have basically the recipe for an earnings beat as of now with Taiwan Semiconductors, how you can kind of get ahead of that and not be shocked when you go, wow, they beat on earnings. Look at that stock go. That's incredible. Good stuff. Anyways, I'll take your questions if you have any questions, and then we will roll on out. Get ready for Wine and Wealth here tonight. Kroger is the only one to report tomorrow. So if you're curious, Kroger's due to report tomorrow. It's kind of a mixed bag on earnings in terms of performance there. 70% chance they beat on earnings, 63% chance they beat on revenue. It is positive 50% of the time on earnings day. So there's nothing for me to focus on there. And that's been the case lately. So you haven't noticed me giving a lot of those stats plays wrapped around earnings because there's just nothing really great right now. Yep. Chris says, hey, Dustin, when stocks and bonds are correlated, which are historically the first to rebound? What would you expect from the signal? Well, okay, so correlation and performance are different. So we could get really geeky here, but because something is correlated to the market doesn't mean it's losing as much. So you could have bonds falling on a day where the stock market fell a lot and bonds barely budged, maybe 1/10 of a point to the downside, right? That's a correlation. It's not very strong on a one-day basis, but that's a correlation. So it's not necessarily that one could turn the corner first, it's that the correlation could spread. So if you were to plot that or do the ratio between the performance of stocks and bonds, you'd have to do aggregate bonds there, but if we were to plot that, you're actually looking for that to flatline. So it's not really something like a question you'd say, oh, well, is something going to turn? And if so, which one turns by the most? Not the same deal there. Thoughts on NVIDIA for a long-term hold? I know analysts would agree with that position there. There are a lot of analysts that say there's still more downside to come, but it's a good place to have start a position for a long-term investment. I would have nothing else to offer to that other than going with what they say. So I would encourage you to look at what a lot of the analysts are saying as far as their price zones and everything, and why this is a good discount. What's their argument there? Yeah. And Bill's with you too, man. Because I got it. Bill's got your back. Don't worry. DC Roki, what's up? I'm sure that's not how you say your name, but good to see you. Good to see you. Can you imagine one day where this is not going to be just me talking? We're all going to see each other. It'd be interaction there. Like there's a new phase of how this could go. It's incredible there, but we'll see. Scott's Miracle Grow. Is it oversold? Technically, yes, it is oversold. It's on the chart for you there. Compared to itself, it is oversold. This is a very difficult one to participate in because of their participation in other, shall we say, green industries. No, you can't say green, right? That's EVs. You got to say, well, you know what I'm saying, right? Goofy industries. Do you think the stock and bond correlation is because of net liquidity or decreasing overall? I think it's because of the Fed. It's you know, you got more money than anybody, or you can poof more money than anybody. Yeah, it's going to be part of it there. Pelosi going to be buying NVIDIA soon. Actually, somebody has taken her place as the best congressman, in this case a guy, to have the best returns. Pelosi gets all the attention, but is Buckley somebody? I want to say Bill Buckley, but I might be mistaken, as the best performing senator trader. So congratulations. I don't know if he's Republican, Democrat, or who he is, but he is comfortably now in first place. And I believe, I can't remember which one it was. He was in a minor or something there. SQM maybe. He's killing it. He's killing it with his trades this year. But yeah, no, Pelosi don't do bad. I'll give you that. But the other guy is clearly in the lead. He's beating her easily. We got to get some stats for that. You want to see another wine and wealth about the companies you've chosen for funds, especially small caps? Interesting to learn. I thought, yeah, that's a good idea. I like talking about small caps, so no problem there. The stocks that, what'd we do? We did mid cap last time, right? Because we had Twinkie in there, I believe. But yeah, I like doing that. I like that. Yeah. You want to start a position on Shopify? Why is that? You think it's gonna rebound here? I'm not a one that would say yes or whatever to go for that. I don't like the dead money position. Now, granted, if I go like this, like this, doesn't look so dead anymore. So it's really just the chart. But there's nothing. What's the reason this is going to come out of its funk and become some, double, triple, or quadruple? Yep, Elite is doing. Is it Buckley? Okay, it might. Yeah, if you guys say it's him, maybe somebody looked it up. Yeah, he's killing it. How much cash do you have? I have a 22-year-old daughter, so I haven't seen cash in 15 years. So, yeah. Buckley is the name. Yeah, there you go. There you go. Everybody gives Pelosi a hard time, rightfully so. But hey, let's look at this guy too. They're making millions. I might run for Congress one day. You never know. I'll just be honest about it. Like, hey, I'll vote for whatever you guys want. I'm just trying to make the dough. All right. Let me get out of the way. Just saying stuff. I'm getting in trouble. Wine and Wealth a little bit later. We'll see you later for that. You guys enjoy the rest of your evening, and hopefully it's not pouring down rain where you're from. Enjoy. Adios.